Good morning.
Morning.
Good morning.
Oh, and in case I don't see you, good afternoon, good evening, and good night.
Assalamualaikum warahmatullahi wabarakatuh. Greeting to my lecturer, Dr. Alias Bimatno, and my fellows, comrades. My name is KHAIRIL and my matrix number is 265963. This is my slide, and the title are Sukuk, Global Challenges and Issues. It is for my subject on regulation for Islamic finance and banking, and the code are BWFS 2033. So hope you guys enjoy it. Stay tuned.
Stay here. I'll be back.
Introduction. Sukuk has become the main attraction among bank, corporation, and customers. This is because Sukuk is an Islamic asset-backed financial product that is compliant with Sharia and also it is issued by Islamic financial institution. Sukuk is not the same thing as conventional bonds. Sukuk are asset-backed financial instruments instead of being interest-bearing debt securities. These give right to holders to own of ownership in the properties or asset of the issuer and or the organization. Sukuk structure entails a special purpose corporation (SPC) to purchasing a property asset, the collection of cash by the SPC to issue the sukuk and in turn give confidence to sukuk holders. Subsequently, the sukuk holder will be repaid return based on the asset rental income. Bonds do not represent holders of bond ownership inside the business for which they are issued with. Instead, they are used to record the interest-bearing debt owed to bondholders. Later, bondholders receive interest payment per monthly. This interest by right is calculated as the proportion of the capital instead of the percentage by the real profit. Healthy criteria for disclosure and reporting are used only as the guideline by the most majority of Islamic financial institutions around the world. These guidelines are not obligatory. Definition. Sukuk is an Islamic asset-backed financial product. It gives a right to holder to own of ownership. Holder of sukuk do not get interest because interests are considered riba and riba are forbidden in Islam. The sukuk holder will be repaid return based on the asset rental income. The sukuk contract must specifically follow Sharia. AUFI Standard 17 Investment Sukuk that lists about 14 different types of sukuk as permitted. The differences. For my right side is sukuk, and for my left side is conventional bonds. Now, sukuk indicate ownership of an asset, while bond indicate a debt obligation. Second, the asset that back sukuk are compliant with Sharia, while asset backing bonds may include products or services that against Islam. Sukuk are priced according to the value of the asset backing them, while bond pricing is based on credit rating. Sukuk can increase in value when the asset increase in value, while profit from bonds correspond to fixed interest, making them riba. And when you sell sukuk, you are selling ownership in the asset, backing them. But the sale of bonds is only the sale of debt. Background of the issue. Muhammad Taqi Usmani has raised concern about market sukuk structure that guarantee sukuk holders capital returns. This sukuk must be redeemed at a face value rather than market value, either through manager or issuer covenant, and enable connected entities to make credit enhancement purchase guarantees. 85% of the sukuk that have been issued were not established in a Sharia-compliant manner in the Gulf Cooperation Council (GCC). According to him, he contends that the issuers' existing practice were in 3 areas incompatible with Sharia. They will mention further down. Sukuk contract is not tied to predicted revenues from the company, but rather to financing costs or market interest rate. This interest or riba, since as the payment to the manager is not really based on the industrial or commercial enterprise profitability. The holder of sukuk are currently being assured a predetermined rate of return. Moreover, if the produce fail short of the sum pledged, the manager distributes the difference as a loan to them. Such loan sum are later repaid. The Prophet, may peace upon him, said, a sale and a credit are not legal. The return of capital to investor, which should be decided on the basis of market value, but it is impossible to guarantee. There is always a risk with Sharia-compliant transaction. In the case of sukuk, the legal presumption is that there can not possibly be any assurance that is the capital would be given back to investor. Rather, they are entitled a claim for a valid value of the asset of the sukuk. It is regardless of whether or not it is worth more than their face value. Another background of the issue. Sukuk holders should not be paid face value at maturity, but rather the market value of the sukuk. AUFI published the following new recommendation for sukuk issuers in 2008. There, the asset must be transferred from the issuer to the sukuk holders. Sukuk cannot represent receivables or debt in order to be traded. Sukuk issuers are not allowed to cover loan short age to the holder of sukuk. Sukuk issuers can guarantee capital in the event of negligence. Lessees in Sukuk al-Ijarah have the option to buy the lead asset for its nominal value. Boards of Sharia are responsible for reviewing all documentation or contract. The findings are the company selling to the SPE and assets for the period of the sukuk. And in mostly circumstances, the asset is restored to the company after the sukuk mature. One could argue that this form of transfer does not qualify as a sale and thus is not subject to International Financial Reporting Standard (IFRS) recognition. International Accounting Standard Board (IASB) is presently looking into this matter. Whether the SPE is a subsidiary that acquired the asset from the parent companies. If this is the case, the entity should be consolidated in the group accounts, and the asset value at the closing of the financial period should reflect fair value as defined by IFRS and AUFI standard. The temporal value of money, because sukuk is not included in the standards, in all of the explanations by the IFRS is solely being focusing on interest. Liquidity management, capital sufficiency, standardization, global regulatory framework, taxes for Islamic financial instruments, and risk management are just a few of the many worldwide problems that sukuk face. Islamic financial organizations currently offer just a limited number of instruments, such as mudarabah, tawarruf-based financial, and wakalah instruments are among them. Differing schools of thought among Sharia scholars in Muslim countries, regulation and product offerings are also complicated. This has an impact on investor confidence to some extent. Also, human resources in this field are limited. Universities can help to produce qualified Sharia scholars and experts. The solutions are the AUFI FAS 17 standard recommends that sukuk investment and share should be recognized and assessed at cost on the acquisition date. Investment in the share and the sukuk held for the trading purpose and the available for sale must. However, at the end of the accounting period, it must be measured at their fair value. According to AUFI FAS 17, any unrealized loss or gain arising for remeasurement at fair value must be reflected in the statement of financial position under the investment fair value reserve. This reserve account will reflect the net gain or loss at the end of the year. AUFI Part 17 suggests that fair value be used to measure securities held for trading and available for sale. Other than forced or liquidation sales, fair value is defined as the amount that the instrument might be traded or settled for between knowledgeable and willing parties in arm's length transaction. Sukuk investment are subject to additional disclosure requirement under AUFI Part 17. The issuer of Sukuk is required to disclose, if material, the face value of the Sukuk, the percentage of Sukuk acquired from each entity issuing the Sukuk, and each form of Sukuk. IFRS 7 requires the company to disclose the significance of the financial instrument according to different categories. Financial assets and liabilities are to be measured at fair value through profit and loss, showing separately those held for trading and those designed at initial recognition. IFRS 13 recommends 3 levels of input based on the lowest level of input significant to the overall fair value, which are Level 1, quoted price for similar instrument. Level 2, directly observable market inputs other than Level 1 inputs. And Level 3, inputs not based on observable market data. Companies must also disclose credit, liquidity, and market risk under IFRS 7. This increased risk information is beneficial to users, and it is suggested that AUFI implement similar disclosure standards. Even Islamic financial instruments are susceptible to a number of dangers. And lastly, the conclusion. Due to the strict Sharia rules, Sukuk structures differ from conventional bonds, necessitating distinct accounting, valuation, measurement, and disclosure techniques or standards. As fundamental distinction is that Sukuk are asset-backed financial products that do not bear interest, while conventional bonds are debt-based. The IASB is working hard to ensure that all countries' local standards are aligned based to IFRS. Before any truly global and significant covenant can take place in the near future, the IFRS and AUFI standards must be harmonized. Islamic finance requires an international regulatory framework that is agreed upon by all states. Therefore, it is important for Sharia experts to engage in more conversations or meetings by considering the diversity of judgments issued by various Sharia advisory boards from various jurisdictions.
This song is for those who inspire us today, who always lend a helping hand to help show us the way. This song is for those who see their students through the tough times in their lives. For that we say thank you. You have made a difference. You have shaped our minds. You have changed the world, one child at a time. You have always been there in everything you do. I hope that you're as proud of me as I am proud of you. And I will always be there in everything I do. I hope that you're as proud of me as I am proud of you.